the Basel Committee of Banking Supervision, the BCBS, has finalized its standard on the prudential treatment of banks' crypto asset exposures. And this first standard that is agreed makes an important milestone in this respect. It provides a, first of all, harmonized international regulatory and supervisory approach to banks' crypto asset exposures. And second, it aims to balance responsible private sector innovation with sound bank risk management and financial stability concerns. As a next step, it will be key for the European Union and other Basel jurisdictions to transpose this Basel standard into legislation. And the date foreseen for this is the 1st of January 2025 as a commonly agreed deadline. The BCBS standard is not yet legally binding. It's pending on its transposition in the European Union law. However, should banks wish to engage in this market, they are already now expected to comply with the standard and take it into account in their business and capital planning.
The key issue was and still is how to find the right balance between the need to ensure financial stability, market integrity, investor protection, while avoiding to stifle financial innovation and the potential benefit it may have. We think that banks, thanks to their expertise in risk management, could introduce the same appropriate safeguard they have on other asset classes within the crypto asset services offering. And in this regard, we recommend to remove any competitive advantage of less reliable actors to create a robust and resilient market and avoid any recurrence of what already happened. So that's why I'm strongly convinced that we need a more comprehensive regulatory framework that goes beyond the traditional approach, including increasing prudential requirements on regulated entities.
My impression is that once we have MiCA in the EU, we have a geopolitical bloc of 27 countries, which are quite significant. And the standards and the language, the methodology that we will have in place in Europe might serve at least as a starting global standard for other jurisdictions as well. MiCA is quite interesting because it builds a lot on market practice, and it takes up market practice and what industry has been developing, and obviously refines it and fixes a lot of things that haven't worked well. For instance, issues of custody, segregation of clients' assets. We have to move quickly. Even if MiCA is approved in April, it will have, at least in its current version, 18 months of transitional period, and it requires a lot of regulatory and technical implementing standards to be properly up and running before it comes into force.
How can, again, regulators and supervisors strike the right balance between avoiding to stifle innovation and at the same time supervise the banks effectively?
I think the Basel standard and the FSB is a clear signal that indeed there is a possibility to agree internationally. And it's not easy. It's always long discussions. It's always still, because it's so quickly developing, it's not so easy to find the right point in time where you do it, but we have to go there. And I think we are moving in that direction. I think it's big. It's maybe still a bit of niche in some things, but niches can also be very, very dangerous in terms of contagion effects. And this Basel standard basically has these two goals. First of all, make sure that innovation and development can continue, and on the other hand, avoid financial risks and contagion. And I think this was achieved by that standard.
A good example of how you can combine a flexible regulatory approach by upholding technological development is the DLT pilot regime regulation that allows for some kind of experimentation, let's use the word sandbox, in order to develop projects that use the underlying technology, but in a protected environment where they can develop and grow and deploy all their capabilities. I think this is a good example, and I would suggest that we consider extending the scope of the DLT pilot regime which today is probably too narrow. It's capped in terms of amounts and also limited in terms of scope, and extended to other sectors as well.
I wanted to ask regarding, let's say, the further development of crypto supervision. I mean, this is now, I guess, on a global scale, one of the first standards that we are seeing, or the first one actually. How do you think this will further evolve? Is there anything else in the planning when it comes to crypto supervision and for example, also decentralized finance?
Regulation per se is not the only way. I think we need also other two components. First, I think it is essential to continue with the sandbox approach, where banks and other entities can test their products, their services, let's say, in a protected environment. And also we need financial education to ensure that investors, and particularly retail investors, are aware of the risks and may also better understand that sometimes the administrative burdens required when they are dealing with banks are also needed to ensure their protection.
On the one side, we're building a comprehensive EU regulation on crypto assets, and this is fine, but there's a weak spot in all of this, which is taxonomy. The need to be extremely clear as to the nature of the crypto asset and the crypto asset service provider as a consequence. What is this crypto asset and where does it fall within the landscape of EU regulation? Is it really a utility token? Is it a payment token? Is it a financial instrument? The danger that we misinterpret the nature, misunderstand the nature of a crypto asset has dramatic effects for supervision and enforcement, because you may have one country, one authority in one member state that looks at a crypto asset, which is a bit sort of difficult to understand, and says this is a financial instrument or this is a payment token, but in another country, classification may be different,